If you think Wall Street was all in on crypto and Bitcoin before, wait until you see this video. Things are moving way faster than anyone expected. If you're wondering how to position for what's about to happen next, you're in the right place. If you just step back for a minute, you'll see something major is happening in crypto. No, it's not the price, at least not yet. It's a whole new foundation being built underneath us. Today, I'm walking you through the most important story that the headlines are missing, where real capital is moving, why the rules are changing, and how the next era of crypto likely will play out, with or without retail even noticing. So stay with me, ladies and gentlemen, because by the end of this episode, you'll be seeing the markets through a completely different lens. If you've been here for more than a couple cycles, you know that the big shifts almost never start with price. They start with the quiet stuff. The flows, the policies, the rails, stuff that doesn't hit TikTok or X right away. It reminds me of being back in the room in 2017 when everybody was watching for the next ICO and totally missed the slow motion build out of the game-changing L1s that led the last bull run. Right now, the market is evolving. This show is all about decoding that evolution, making sense of the big moves in regulation, institutional capital, and macro trends. And just like every major shift before it, this one is easy to miss if you're focused on price alone. Let's start with the backbone of this shift, spot crypto ETFs. The SEC is rewriting the entire playbook, moving away from this slow, antiquated, case-by-case approvals and toward a more universal framework. This is the first time we're seeing regulators trying to build systems that can actually scale, because they're gonna need to. Where launching a new spot ETF could be almost as routine as adding a new tech stock to the S&P 500. This is gonna be huge. Think about all the ETFs we're gonna have in crypto in just a few years. In the past, it was normal for every single crypto ETF to get caught up in months or even years of bureaucracy, red tape, and negotiation. Now the SEC is putting out 12-page guidance docs, setting up templates, and working directly with exchanges to nail down language that covers all its bases. It's all about speed, efficiency, and most importantly, predictability for big money. Let's bring up the data. ETF share of total Bitcoin spot volume just set a record, climbing above 30%. That means for every $3 traded on Bitcoin spot, nearly $1 is now going through an ETF. It's a level of institutionalization that would have seemed unthinkable just 3 years ago, just a year ago. For anyone who remembers the first time ETFs launched, the vibe was skepticism. Now it's the new normal, and it's pulling in a tidal wave of capital that moves in a completely different way from retail. It's not just about Bitcoin either. There are whispers and now headlines about the SEC fast-tracking a big Solana spot ETF, possibly well before October. This domino effect, it's real. As soon as the system is in place for one, it can be quickly applied, copy pasta, right, to others. The market is primed for a flood of new crypto products and for the kind of inflows that can change everything overnight. This is where I want you to start thinking like an allocator. When the foundations are predictable, when the framework is there, that's when real money can finally start moving in size with full compliance. That's what changes markets for the long term. And that's exactly what you need to keep in the back of your mind when determining where you should be allocating next. And if you want an idea of how quickly this is accelerating, just today, we saw more than $285 million in corporate Bitcoin buys from names like Metaplanet, Semler Scientific, and others. And just yesterday, there was over $250 million from spot Bitcoin ETFs. That's $500 million in a 24-hour period just from those two segments alone. What I'm talking about is happening in real time, and it's part of the foundations that are shifting so fast. In 12 or 24 hours, we had $500 million just from a few corporates and a few ETFs, not to mention everything else that's happening all over the world. We probably have governments quietly stacking, high net worth individuals quietly stacking. And you guys, a lot of people aren't seeing it because the price isn't skyrocketing. That can be a tricky game when all you do is look at the charts, but in reality, we see what's actually happening. Don't you see that this corporate treasury buy is just the first stepping stone? I mean, check this out for a second. Let me show you something. Just today, we had from the Bitcoin historian says, just in Swedish Bitcoin treasury company BTC AB surges over 100% on its first day as a publicly traded company. Global wealth is waking up huge. And you can see over here, over in Sweden, we have a company being traded there publicly now. It's probably I think it's the first one as far as I'm aware of, but 100% boom on day one. There's so much global demand and people can get it wherever they can get it. So if you're a Swede, you're going to go buy this thing in Sweden, right? And we'll talk about that a little bit later in the show as well, how the psychology is happening country by country on every main stage in the world. It's wild. While all of this is going on, macro risk is off the charts. The US just escalated a global trade war with tariffs ranging from 25 to 40% on more than a dozen countries, including Japan, South Korea, Malaysia, South Africa, and several others. Each new trade letter from the White House lands with a thud in global markets. Every announcement is a reminder that policy risk is back at the center of investing. President Trump has made it clear these rates can go even higher if countries retaliate, and nothing is truly locked in anymore. The S&P 500 has been rocked by each new headline. When the tariffs were first announced, losses accelerated down over 1% just yesterday. And yet, if you pull up the Bitcoin chart the same window, it barely moved. Bitcoin is still holding steady around $108,000. And for anyone who's been watching, it's clear that capital is starting to treat BTC as a hedge, something that isn't caught up in the trade drama. And that's one of the beautiful things about Bitcoin. It acts as a risk asset during bull runs and as a flight to safety when everything else turns chaotic. Bitcoin plays both sides. It can spark aggressive growth for some and offer digital shelter for others when uncertainty hits. And lately, that uncertainty seems to show up more and more. Let's frame this even more broadly. The first half of 2025 has been all about trade policy, but now the story is shifting back to monetary policy. The Fed is pausing, watching the data, but pressure to cut rates is building. Major banks expect 2 cuts by the end of the year. Ooh, hopefully they're nice and juicy ones. And future markets are quietly pricing in easier money. This is a double easing environment. Fiscal policy is loose, monetary policy is getting looser, and the Fed is already ending quantitative tightening ahead of schedule. This, to me, just screams that we're going to go blow past the 4-year cycle and we're going to be full-on bull market in 2026. That's what it seems like to me. Liquidity is the lifeblood of every market. When policy risk is high and liquidity is returning, risk assets catch a bid. If you're thinking about positioning for the next 6 months, this is the setup to watch. The intersection of global uncertainty and quietly improving liquidity conditions. Now, this is where things get really interesting for crypto. The US Senate Banking Committee is holding a major hearing on digital asset regulatory framework. This hearing moves beyond mere discussion. Lawmakers are rolling out a market structure bill that takes pieces from the Lummis-Gillibrand Responsible Financial Innovation Act, the House Clarity Act, and the new Senate proposals. The target is to put market structure legislation on the books before August recess. This is part of Trump's executive order that he signed about crypto. The White House has joined the effort. Trump's working group is set to deliver a comprehensive crypto policy report by July 22nd. Covering topics like a national digital asset reserve and Fed payment system access for crypto firms. This level of engagement brings every major regulatory body into the same conversation. This alignment between Congress, the White House, the SEC, the CFTC, FinCEN, etc., is something that we've never seen before, ever. They've always been like blah, 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 arguing with each other, right? But no longer is crypto being weighed down by enforcement agencies, but lifted up by every branch of the US government simultaneously. And guys, I feel this. I'm literally having conversations with the Presidential Working Group for Digital Assets and the SEC in real time. It's a completely different environment than it was just a year ago. It's very optimistic and it's very relieving to see how it's being handled right now. It's completely surreal to be part of this, but wow, just wow. And it really makes me bullish about about America's future. And I do believe that America will become the crypto capital of the world. That's why I'm back here. So pause and think about this for a second. And when you realize that this is happening all around the world, it's not just America. Imagine our society in 10 years from now, built on the foundation that's being laid this year by America predominantly. But as you can see, when I showed you earlier, Sweden's onto this, Europe is onto this, right? Obviously, the UAE and Middle East has been onto this way before America even. This is a global phenomenon happening right now. A lot of times, countries wait to see what the US does and then follows suit. The Circle IPO greenlit stablecoins for the big leagues. It also greenlit IPOs again and crypto IPOs. All kinds of excitement happening in the financial world. And when that Circle deal closed, family offices, pensions, and endowments picked up the phone. Now, with new rails and exit ramps in place, these institutions see crypto as truly investable for the first time ever. We've had wild bull runs before, but this is going to be nuts. This is how new capital gets unlocked. When I talk to fund managers and institutional investors, it's no longer if they'll allocate, but it's how much and what's the best vehicle and what's the best crypto asset to buy. That's the quiet story under the surface. Real rails, real access, real compliance, and a new on-ramp for scale. Let's zoom in and look at what's happening within crypto. The Bitcoin Dominance Index is at 65% and still rising, a level not seen in years. And the Altcoin Season Index is at decade low. If you've been holding a bag of alts, waiting for a rotation, it probably feels like nothing is working because for now, capital is consolidating. It's not rotating. The time will come, but not yet. I've seen this play out in traditional markets too. Think about the Magnificent Seven stocks, Apple, Microsoft, Nvidia, Google, etc., and a handful of others that carried the whole S&P 500 for years. Hedge funds that tried to diversify got left behind. Now, the same dynamic is happening in crypto. The market is rewarding deep liquidity, infrastructure, and compliance already established for Bitcoin over other narratives or degenerate speculation. Here's where the meta gets really interesting, though. It's not just about who holds the most Bitcoin, but who's buying the companies that are doing the stacking. MetaPlanet is up over 700% year to date after adding 8,000 Bitcoin since December. MicroStrategy stock has climbed 357% year over year, far outpacing Bitcoin itself at around 80%. Corporations with growing Bitcoin treasuries are actually outperforming Bitcoin itself, and owning those equities has become one of the most asymmetric trends of this cycle. Just to give you a sense of scale, the top 100 companies now hold over 850,000 Bitcoin between them. And 61 firms have stacked more than 100 Bitcoin each on their books. And the list is still growing day by day. Publicly traded Sequoia just raised $384 million to launch their own Bitcoin treasury. My mind is literally blown every single day. This is it's unbelievable. But while all this heavyweight capital is pouring into Bitcoin, if you can look over at the performance data for most altcoins, you'll see they're just getting hammered. We're talking about massive drawdowns of like 50 to 95% from last cycle's highs. Only a handful of tokens have defied that trend. And those are the ones with real product market fit, real growth, real users, real revenue, and transparency that actually attracts institutional eyes. Here's the point. In a market where regulation and scale matter more than ever, the winners pull away because they offer what institutions require: liquidity, security, and a clear path to compliance. And I've evolved too over the years, right? And I've learned as a VC, as an angel investor, what am I looking for when I look at these crypto startups that want to change the world? Well, now I demand a little bit more for them. I want to see, do you have product market fit? Do you have real users? Do you have real revenue? Right? And this is what you should be asking and looking at in everything that you're looking to allocate to. I think the days of just a white paper and raising money are gone. We might get back to that when we get to peak euphoria and irrational exuberance in the market. But I think it's important that you guys learn from the things that I had to learn from, the mistakes that I made of investing into these companies pre-revenue, pre-regulatory path of approval, pre-product market fit. And so if you're watching these videos, these are the things that you need to be looking at. And yes, things will run based on hype alone. Yes, meme coins with no revenue will perform, but it doesn't matter, right? Because if you're playing that casino, you're playing in the casino. You're not an investor. You're not a capital allocator. You're a gambler at that point. And as long as you know that, it's totally fine. But you also have to know that when you go to the casino in Vegas and you're willing, you got $5,000 to spend, you're likely leaving without any of that money. You might hit a huge jackpot and come back with some money. That is a chance it happens, but the likelihood of that happening is low. And the likelihood of you leaving with nothing is high. So fundamentally, it's better if you just try to pick winners and get some conviction in those. Of course, most people want to follow the institutional playbook, but getting access to these top performing stocks and treasury companies isn't always simple. But that's exactly why I've teamed up with Kraken to give you a way in. That's today's channel sponsor. If you've ever felt like you're missing the next big move, these days, it's not just coins pumping, but some of the biggest opportunities, like we talked about in today's episode, are coming from public companies adding crypto to their treasuries. And that's why I use Kraken. With Kraken, you get access to over 11,000 assets, crypto, stocks, and ETFs, all in one secure, easy-to-use dashboard. Bitcoin, Ethereum, Tesla, Apple, MicroStrategy, the hottest tokens, the latest IPOs, they're all here at Kraken, ready to trade. No more juggling apps or chasing trends after they've already moved. Kraken makes it simple. Sign up in minutes, fund instantly, and trade in seconds with industry-leading security, proof of reserves, 24/7 support, and they've been around since like 2011, and they have the best reputation in the space for security. So don't wait from the headlines, guys. When the market evolves, take control of Kraken, trade crypto, stocks, ETFs, all in one place, all in your terms. And I must say, guys, I must disclose, none of this is financial advice. Of course, do your own research and make your investment decisions on your own behalf. And if you guys are signing up for Kraken, which I highly recommend you do, of course, for Americans, you can go there and use it as well, no problem. Use my affiliate link in the description below. It really helps the channel out, guys. Thank you so much. Now let's get back to it. Let's talk about flows, because this is where the numbers tell the truth. Digital asset products have now posted their 12th consecutive week of inflows, over 1.03 billion just this week, and a new record in total assets under management at 188 billion. For Bitcoin, ETF net inflows alone topped $9 billion in just 5 weeks, while gold ETFs saw nearly $3 billion exit over the same period. Crazy, right? These flows stand out from previous cycles because of the quality of capital entering. Traders and short-term speculators have not been the main driver. Instead, pensions, endowments, family offices, and public companies are stepping in through compliant institutional-grade vehicles. Even public companies are now pivoting from just holding Bitcoin. Bit Digital, a NASDAQ-listed firm, just sold 280 Bitcoin and raised $172 million to convert its entire treasury to Ethereum. They now hold over 100,000 ETH, putting them among the world's largest public ETH holders. ETF flows for ETH have been positive for 8 straight weeks, topping 61,000 ETH. Anyone talking about positioning for volatility ahead will want to watch signals like these to make sure the trend continues. For portfolio managers, the questions now focus on where the sticky capital is going and which assets institutions are choosing. The answers continue to show up in the flows data, even when headlines are quiet. But spotting these flows is one thing. Learning how to ride them is what really matters. Now, let's get specific about how this changes positioning. It's now about aligning with the flows, on-ramps, and institutions that are driving the market forward. MicroStrategy, the public company most synonymous with Bitcoin accumulation, just reported $14 billion in total fair value appreciation for Q2. And they're raising another $4.2 billion to buy more. It's just insane. This is what conviction looks like at scale of a multinational corporate balance sheet. But it's not just the usual suspects. Real estate giant Murano is adding $500 million in Bitcoin to its reserves. It's just wild. Marking a shift in how even traditionally conservative sectors like real estate are approaching digital assets. Meanwhile, the AI sector is converging with crypto in a way we've never seen. CoreWeave's $9 billion acquisition of Core Scientific is as much a bet on digital infrastructure as it is on the Bitcoin and mining energy. That's a trend every allocator should be watching closely. Energy, compute, and crypto are all blending into one macro asset class. As someone who's sat through more than a few cycles, I can tell you, The best outcomes almost always come from following the flows and sticking with proven outperformers. The market gives you these signals every time. The trick is to listen. So let's give you like a little checklist here. What to watch for, the market structure bills. This is actually coming into what America has called next week, Crypto Week. Fantastic, right? And also the time that we're getting these new structure bills in place. So let's go through a quick little checklist. ETF flows have become a powerful signal, often revealing where institutional capital is quietly building positions before the headlines catch up. Tracking the weekly patterns in these flows, especially when new products launch or volumes surge outside of Bitcoin, helps reveal how the market's foundation is changing beneath the surface. Meanwhile, the policy front in Washington is more active than ever. Congressional hearings and draft bills are setting the stage for the next wave of custody standards, tax clarity, and stablecoin rules. These legislative moves might not generate daily excitement, but they provide the scaffolding that makes large-scale participation possible. Watching how these policies play out is crucial for anyone planning to position for the coming quarters. Macro events continue to shape the environment. With the next CPI reports, FOMC minutes, or sudden fiscal policy announcement, capital can shift direction quickly, sometimes faster than retail sentiment or social media trends would suggest. In this kind of market, where spot and futures liquidity remain low, even a single big participant can drive volatility that catches most investors off guard. For those thinking beyond the day-to-day, effective positioning now means focusing on the strongest signs of adoption and aligning with flows that have real staying power. Whether that's access to Bitcoin and Ethereum through spot ETFs or regulated investment vehicles, or selectively building exposure to a small number of emerging projects with clear product market fit. The best outcomes tend to come from tracking where structure and compliance invite new capital. And guys, I know that sounds like a lot, and that was like a little checklist, but to make it easy, all you have to do is subscribe to this channel if you're not already. And if you are, fantastic. All you have to do is watch the channel and make sure you like the video too. But like, I'm going to be covering all the stuff for you guys as it evolves. We do it every week. And even the US leadership is taking notice, guys. Vice President JD Vance just went on record saying 100 million Americans could own Bitcoin soon. Check out this clip.
And when it comes to crypto, I think the last several years have made it clear that we're talking about genuine, ground-up innovation, one that's already improving the well-being of tens of millions of our fellow citizens. I believe it's 50 million Americans own Bitcoin, and I believe that's going to be 100 million before too long.
That's double. That's 2x from what is happening now. Imagine what that does to the network effect. I mean, after you buy Bitcoin, don't you go tell your friends to buy Bitcoin, and they go buy Bitcoin, and then they tell their friends to buy Bitcoin. This is how network effect works, and Bitcoin has one of the strongest network effects of the world that I've ever seen for anything. It's unbelievable. When you think about that kind of adoption, the next wave of capital, both corporate and individual, could be unlike anything we've seen before. Crypto in 2025 is a market that is maturing right in front of us. The real story now is about structure, clear rules, and the steady movement of capital rather than chasing price alone. And price does lead interest, and it will happen. Bitcoin stands out as the anchor for institutional allocation, while Ethereum continues to attract attention as regulatory clarity improves. I think the whole Ethereum ecosystem is about to have a huge run. I made a breakdown of my top ETH altcoins that I'll link at the end of the show. Make sure you go check it out if you haven't already. Large players are building positions with a multi-year perspective, focusing on compliance, access, and scale over short-term speculation. If you guys found value in this video, make sure to let me know in the comments below. I read all the comments. Let me know if I was wrong on something, if you'd like me to talk about something else, if you're starting to rotate to altcoins or not, if you're a big Bitcoin holder. I don't know. I'm curious to hear all you guys' thoughts. It helps me improve how I make these videos as well. And make sure to subscribe to the channel if you're not already. And share this video with someone who's lost in the noise and needs to see the bigger picture. Someone who hasn't bought Bitcoin yet, who's on the sidelines, because they need to see this video. This phase of crypto is about understanding the foundations being set and recognizing the signals that matter for the long term. And I'll be here to bring you guys everything you need to know to stay ahead of everybody else. Watch this next show to see my top Ethereum altcoins. And remember, guys, stay sharp, stack your Satoshis. I'll catch you in the next one. See ya.